Irish companies typically don't use the public markets as a way of fundraising. Typically, they're funded by way of either shareholders' funds or debt. My concern is that Irish companies sell too early and that they pay down the debt by way of a trade sale rather than an IPO. To put it in context, the Irish stock market has 51 listed companies. The Swedish stock market, their full market, has 300 listed companies, and their secondary market has 300 listed companies. So they have a great history of IPOs, had 115 in 2017 compared to 3 Irish IPOs. And the 3 Irish IPOs have to be taken in the context that 3 other companies left the Irish stock market. So we don't have a great history of going to the public markets to raise equity funding. Well, firstly, I suppose you raise equity capital, which is permanent capital and doesn't have to be repaid. Like when you raise, whether it's bank debt, even EIS, private equity, venture capital, it has to be repaid. It is debt, so it's not permanent capital. And therefore, there's pressure for that debt to be repaid at a point in time. And consequently, usually what happens is a trade sale. And what we think companies should think about is an IPO. And that allows early stage investors that have put money in by VC or private equity to realise value. It also allows founders to get a proper liquidity in their shares. It allows management to be given share options that are liquid. So we really see a lot of benefit in an IPO. I think the critical first step to take in preparing for an IPO is not to underestimate the time it takes. I think the more time one has, the more prepared one is. The first step, I suppose, is to really ensure that you have the proper management team on board. You really need a good combination of non-executive directors and an executive management team that are capable of leading a public company. But there is a rigour associated with the public markets. There's also, a lot of responsibility to shareholders and a lot of investor presentations to attend to. So therefore you need a chief executive and a chief financial officer that are comfortable with public markets and comfortable with addressing investors. Additionally, you need the right team of advisors behind you, both corporate finance team, and solicitors, lawyers and auditors and accountants, because there's quite a bit of public records, a lot of prospectus documentation, a lot of preparation required, and you really need a team that can work together and a team that have done it before. At Mazars, we were very fortunate to work with Zootech both in Dublin and in Stockholm as they floated on Nasdaq North. It was the first Irish company to float on Nasdaq North, and we see this as a route that other Irish companies might take. And indeed, Irish companies might look at our own ESM and full listing as a way to raise equity capital. So we're delighted to work and help businesses as they embark either at early stage or at a more later stage in terms of raising equity and the capital markets.